The hidden sovereign, the BIS and its quiet command over global finance. 1. Introduction: the silent empire of finance. Often dubbed the bank that runs the world, the Bank for International Settlements, BIS, operates largely beyond the awareness of the global public. Yet, this institution, established ostensibly to facilitate reparations post-World War I, has evolved into the nerve center of international monetary coordination. It remains cloaked in legal immunities, diplomatic privileges, and regulatory obscurity, functioning with powers rivaling sovereign nations. Footnote: the BIS serves as an unaccountable yet indispensable entity in global finance. 2. Legal structure and supranational immunities. Founded by international treaty in 1930 and headquartered in Basel, Switzerland, the BIS enjoys extraterritorial status comparable to that of the United Nations or the IMF. Its staff are immune from prosecution under Swiss law, its assets cannot be seized under civil claims, and it retains the right to communicate in encrypted code, far removed from typical regulatory scrutiny. These privileges grant it a unique position, functioning as a state within a state. Footnote: the BIS is protected by treaty-based immunities that place it outside national jurisdiction. 3. Institutional evolution and endurance. Though originally created to manage German reparations, the BIS has survived multiple geopolitical upheavals, including World War II, during which it controversially transacted with Nazi Germany. Despite calls for its dissolution, the BIS not only persisted but entrenched its relevance through participation in the formation of post-war monetary policy, notably the European monetary system. Footnote: the BIS has repeatedly reinvented itself to remain central to global economic governance. 4. The Euro and Technocratic integration. The BIS was instrumental in the decades-long coordination that preceded the Euro's 1999 launch. Through mechanisms such as the European Monetary Cooperation Fund and the Basel-based coordination of exchange rates, it facilitated the harmonization necessary for monetary union. This quiet orchestration occurred without democratic referenda in most member states, reflecting a transfer of sovereignty to technocratic bodies. Footnote: the euro was born of decades of BIS-led planning with minimal public input. 5. Gold, the London Gold Pool, and the BIS's role in market suppression. In 1961, the BIS helped coordinate the London Gold Pool, an informal cartel of central banks aimed at artificially stabilizing gold prices under the Bretton Woods framework. No formal agreement was signed, central bankers merely shook hands. This manipulation maintained dollar-gold parity at $35 per oz, but collapsed in 1968 under mounting market pressures, proving the fragility of fiat stabilization schemes. Footnote: the BIS helped orchestrate covert gold price controls without formal accountability. 6. Crisis management and regulatory hegemony. From the 2008 financial crisis to the COVID-era liquidity infusions, the BIS has assumed an advisory and supervisory role over commercial banking regulations via the Basel Committee. Basel III elevated gold to a Tier 1 asset in 2019, a policy that many interpret as foreshadowing a return to commodity-backed monetary structures amidst rising sovereign debt instability. Footnote: the BIS plays a regulatory role while also forecasting systemic resets through its policies. 7. Project mBridge and CBDC infrastructure. Through its innovation hub, the BIS is developing Project mBridge, a multi-central bank digital currency, CBDC, platform that aims to replace the SWIFT system with blockchain-based real-time settlements. Although marketed as an efficiency upgrade, this new architecture centralizes control, threatens financial privacy, and enables programmable censorship. Footnote: Project mBridge reveals the BIS's ambitions to modernize and control global payment systems. 8. CBDCs and the end of cash, panoptic finance. CBDCs represent not merely a technological shift, but a philosophical reconfiguration of money. Unlike cash, they are fully traceable, programmable, and subject to centralized permissions. The BIS openly advocates for CBDCs as tools of monetary policy, despite their profound implications for personal autonomy, transaction privacy, and economic sovereignty. Footnote: the BIS views CBDCs as policy tools, but their implementation threatens individual financial liberty. 9. Accountability loops and circular governance. The BIS is owned by 63 central banks, which are themselves nominally accountable to their respective national governments. However, the BIS answers to no elected body. It hosts private meetings devoid of official minutes, and its policy-making is carried out through interlocking committees that reinforce its internal consensus, rendering its governance circular and opaque. Footnote: the BIS's governance structure ensures it answers only to the very entities it convenes. 10. Conclusion: the quiet architect of global finance. The BIS represents a persistent paradox in global governance, a public-private hybrid wielding supranational power with minimal scrutiny. Its historical entanglements, its role in currency engineering, its gold strategies, and its digital ambitions converge on a single truth: this institution is more than a bank. It is a technocratic sovereign. Footnote: the BIS is a sovereign institution in function if not in name, architect of past systems and designer of the future monetary order.